The years 2025 and 2026 could be the most important window of opportunity in the history of cryptocurrency. This is not a guess based on hope, but an observation based on powerful trends coming together at the same time. The crypto market is known for big ups and downs, but the foundation for the next phase of growth is being built in plain sight. The total crypto market value grew by approximately 97.7% in 2024. The coming months bring a rare period where new technology, big money, and clear rules are all aligning. Understanding this window means looking at the big picture. It is not about one coin or one piece of news. It is a collection of events that each add strength to the digital asset ecosystem. The materials have been gathered, the foundation is poured, and construction is accelerating. This is a story of maturation, and a rare opportunity for those paying attention. One of the biggest changes is the arrival of spot Bitcoin exchange-traded funds, ETFs. They track Bitcoin's price and trade on traditional stock markets, making it easy to gain exposure without managing wallets or private keys. This approval built a secure bridge between traditional finance and digital assets. Capital has flowed in rapidly, unlocking large-scale participation. Advisors can now recommend crypto via familiar regulated products. Beyond retail traders, pensions, endowments, and corporations are allocating. Institutional inflows add credibility and can dampen extreme volatility. Bitcoin is increasingly treated on par with major assets. The ETF is a beginning, paving the way for more crypto investment products. Each new product deepens liquidity, expands users, and accelerates development. Institutional adoption is no longer future talk, it is shaping 2025. Another core reason to watch this window is Bitcoin's halving. Roughly every 4 years, miner rewards are cut in half, reducing the rate of new coins entering the market. The most recent halving occurred in April 2024, with effects historically rippling over the following 18 to 24 months. If demand holds or rises while new supply halves, prices tend to climb. History shows post-halving surges, though nothing is guaranteed. This cycle is unique. Supply cuts meet rising institutional demand. Programmed scarcity sets Bitcoin apart from currencies that can be printed. With a fixed cap of 21 million, scarcity is predictable and transparent. 2025 to 2026 will show how this plays out at scale. It is a built-in catalyst, independent of daily news or sentiment. Beyond crypto, the global economy is creating conditions that favor digital assets. Massive monetary expansion can lead to inflation. Inflation erodes purchasing power over time. People worry about the long-term value of fiat savings. Investors seek scarce, durable stores of value. Bitcoin is the digital counterpart. Its supply schedule is fixed in code and resistant to dilution. Everyone can verify how much exists today and what remains to be issued. When trust in traditional systems wavers, mathematical certainty is appealing. Allocations remain prudent, reflecting both potential and volatility. With rising debt and complex policy choices, a scarce digital asset stands out. This macro backdrop acts as a long-term tailwind for Bitcoin and the broader crypto market. For crypto to scale, it must be easy, fast, and inexpensive. That was once a challenge, especially during peak demand, but the tech has improved at an incredible pace. Layer 2 solutions sit atop main chains to boost speed and cut fees. The Lightning Network enables near-instant, near-zero-cost Bitcoin payments. Small everyday purchases become practical. On Ethereum, L2 networks have dramatically lowered costs and latency. Wallets are more user-friendly and secure than ever. Stablecoins bring price stability with blockchain efficiency. They enable fast cross-border payments and simple saving on-chain. With faster rails and better UX, more businesses can integrate crypto payments. The technology is finally ready for prime time, forming a solid foundation for growth. For new tech to go mainstream, it needs clear rules. Crypto spent years in uncertainty for users and businesses. That is changing. Governments are building frameworks to manage digital assets. Clarity reduces risk, fosters innovation, and builds public trust. A major milestone is a unified European rulebook that took effect in 2024. It sets standards, protects consumers, and supports stability. Elsewhere, hubs like Hong Kong and Singapore welcome digital asset innovation. Latin America advances integration. In the U.S., progress is underway at state levels with increasingly serious federal discussions. Acceptance and oversight deter bad actors and invite conservative capital. This growing legal certainty is a quiet but powerful force underpinning the next phase of expansion. In any cycle, timing and psychology matter. Markets move on facts, and on fear and greed. As positive forces converge, attention grows. FOMO, the fear of missing out, pulls in the masses late. Early phases often offer the best risk-reward. Well-informed investors position before the frenzy. 2024 into early 2025 resembles that early positioning phase. Entering during growing belief, not peak euphoria, has historical advantages. Volatility remains core. Prices go down as well as up. The goal is not perfect bottoms, but favorable long-term probabilities. Cautious optimism and lessons learned suggest a more sustainable foundation. This opportunity is not about a single event, but a convergence of independent trends amplifying one another. Institutional capital, program scarcity, macro pressures, technology and regulation are aligning. New access creates demand. New supply shrinks at the same time. Soaring demand meets shrinking supply. Macro concerns further funnel interest into scarce assets. Better rails mean newcomers have a smoother experience. Clarity and custody confidence welcome both large and small participants. Unlike prior cycles, nearly every major category aligns today. This convergence builds a strong case for significant sustained growth. 2025 to 2026 is a rare window you should not ignore. Institutional access, predictable supply shock, supportive macro, major tech upgrades, and growing regulatory clarity are converging. The foundation for wider adoption is in place. But the market remains volatile. Nothing is guaranteed. Prices are influenced by technology, regulation, and sentiment shifts. Never invest more than you are willing to lose. The best investment is in your education. Read, learn, and understand the fundamentals. Study different assets and the risks involved. Form opinions from research, not hype. Start small, explore an account, test a tiny purchase, and commit to learning weekly so you can make informed, confident decisions. A unique combination of forces is setting up what could be a historic period for crypto. Supply reduction, macro tailwinds, institutional access, maturing tech, and clearer rules are all in motion. This is not a guarantee. Volatility is real. Manage risk. If you have been on the fence, consider a small, thoughtful first step after doing your homework. If this was helpful, tap like and subscribe for more level-headed crypto updates. Share what excites you or concerns you in the comments. Being early and informed can make all the difference in 2025 and 2026. Thanks for watching. Stay curious, stay safe, and happy investing.